Hi everyone, Scott Kinney here. It's Friday, June 24th. Thought I'd give you a quick update on what's happening in the marketplace. As everyone awoke this morning, all the news has been about Brexit, the UK leaving the European Union. So that's causing a lot of volatility in the stock market. We've seen the stock market open up this morning over 500 points down. You're seeing it across multiple indexes. But really we're seeing that money is now flowing, as it usually does whenever there's uncertainty or risk or bad news in the economy. Money flows to secure items such as the bond. And we're seeing right now the bond opened this morning up about 61 basis points from where it closed the day yesterday. So that's good. That's at least 1/8% usually improvement in interest rate. As we move forward, we're going to have to see, as of today, late here this afternoon, we're starting to see the bond retract just a bit as some of the knee-jerk reactions of the traders kind of plays out. But we've got to see what happens going forward, how things are approached in the coming days and weeks. I think there's two rules of thought here. I think a lot of things are going to happen. If this transaction or separation by the UK goes smoothly, then we are going to see that stocks will start coming back more readily and more quickly, and we'll see the bond price drop, which will cause interest rates to inch back up. However, if we see that, in addition, if this goes really smoothly, you could see additional countries also leave the EU, such as the Netherlands, have already talked about it, and Scotland. And that could create more uncertainty with trading with those countries, so forth. And again, that could send more money to the bonds. So it's really it's hard to determine which way this is going to go. But for the moment, we're seeing improvement in the bond. And I always say, take what you have. Don't expect mortgage rates to get a whole lot better. They could recover here in the coming days and weeks. They could get worse. You just can't tell. All we can tell is what's happening today. And right now the stock markets are skittish, and we are seeing that bringing an improvement to the bond market and mortgage rates. So on another thing I just want to bring up on that you should be aware of, this week trending credit data was supposed to go into effect. Fannie Mae has decided in their wisdom to delay that until September 24th. They were finding that the information wasn't flowing properly and wasn't giving them the decisions they had expected, so they are still working out the bugs on that system. Now, as everyone's probably aware, what trending data is, a credit report right now just looks as a snapshot of time. What is your balance in comparison to high credit limit? Under trending credit, they're going to look at, are you a transactor or a utilizer? A utilizer is someone that doesn't pay down their debts, that just pays the minimum payment every month, and that represents a greater risk. A transactor may have higher debt balances showing on the credit report, which initially looks poor, but because they pay their debts off fully each month, and again, these reports are now going to report for the last 24 months, we'll be able to go back and look and see, did you just start paying off your debts, or has that been a consistent factor? Now, what we understand is they're going to most accurately start looking at the last 6 months heavily. So if you're dealing with a possible purchase transaction, start paying off your debts if you can do it in full each month. That's going to put you in a better situation. Now, it's not supposed to affect credit scores. It's just going to affect the automated underwriting system's approval. So it's really geared more for the borderline client who's got the lower credit scores, who, if you've got a history of paying off your debts in full and maybe have high debt to income ratio, that is going to approve you by having that situation of paying off debts. If you're someone who just utilizes minimum payments on your credit and you're that same borderline person, you may now fall below the line and not get qualified, whereas right now today you might. So it's something to think about. Again, that's coming effective September 24th. If you have any questions, as always, I look forward to helping you and also your clients if you're a realtor. Give me a call. I'm always available. Thanks, and hope you have a great weekend. Bye-bye.